Question 451. An exit load guarantees a higher return. A. True. B. False. Answer B. False. Question 452. Bonds held in the portfolio of a mutual fund are valued at yield to maturity. A. True. B. False. Answer A. True. Question 453. The valuation of non-traded equity shares is done at the trading price 30 days prior to valuation date. A. True. B. False. Answer B. False. Question 454. If a unit holder does not agree to the merger of his fund with another, he has no exit option. A. True. B. False. Answer B. False. Question 455. The most important factor to look for when investing in a corporate fixed deposit is the A. Yield. B. Rate of interest. C. Credit rating of the deposit. D. None of the above. Answer C. Credit rating of the deposit. Question 456. The most important reason for an investor to prefer a bank deposit to a mutual fund is A. The creditworthiness of the bank. B. Because the bank does not invest in securities. C. That the bank offers a guarantee. D. All of the above. Answer A. The creditworthiness of the bank. Question 457. A deep discount bond. A. Is always sold at a discount to its issue price. B. Bears interest annually. C. Is redeemed at a price much higher than issue price. D. Bears interest at varying interests. Answer C. Is redeemed at a price much higher than issue price. Question 458. A mutual fund in India is A. Body corporate. B. Company. C. Trust. D. An asset management company. Answer C. Trust. Question 459. When selling a mutual fund, a good agent would never A. Describe the past performance of the scheme. B. Compare the fund with other mutual funds. C. Assure a rate of return. D. Compare the fund with other financial products. Answer C. Assure a rate of return. Question 460. An investor buys 1 unit of a fund at a NAV of 20 rupees. He receives a dividend of 3 rupees. When the NAV is 21 rupees, the unit is redeemed at a NAV of 22 rupees. Total return is A. 25.71%. B. 27 rupees and 51 paise. C. 21.27%. D. 21 rupees and 75 paise. Answer A. 25.71%. Question 461. A fund sells 100 units of face value Rs10/ at a NAV of 12 rupees and 25 paise. How much would be credited to unit capital? A. 1,225 rupees. B. 225 rupees. C. 1,000 rupees. D. None of the above. Answer C. 1,000 rupees. Question 462. When a scheme with assured returns is being launched, which of the following need not be published in the offer document? A. Means of fulfilling the guarantee. B. Information for all schemes launched by the fund in the past. C. Comparison with other mutual funds. D. Investment objective. Answer C. Comparison with other mutual funds. Question 463. Mutual fund units cannot be distributed by A. Trustees of the fund. B. The AMC. C. Non-banking finance companies. D. Banks. Answer A. Trustees of the fund. Question 464. A debt fund distributes 10% dividend. How much tax does the investor have to pay on this dividend? A. 10%. B. 12%. C. 20%. D. None. Answer D. None. Question 465. A debt fund distributes a 10% dividend. How much tax does the fund have to pay? A. 10%. B. 12%. C. 13.07%. D. None. Answer circa 13.07%. Question 466. How many scrips does Nifty constitute? A. 40. B. 100. C. 30. D. None of the above. Answer D. None of the above. Question 467. Which of the following is the first step in financial planning? A. Asset allocation. B. Selection of fund. C. Studying the features of a scheme. D. None of the above. Answer A. Asset allocation. Question 468. Why should one buy an insurance policy? A. It gives high current returns. B. It gives capital appreciation over its term. C. It should be bought due to the need for insurance and not as an investment. D. All of the above. Answer C. It should be bought due to the need for insurance and not as an investment. Question 469. SEBI regulations for mutual funds were formulated in A. 1992. Born 1993. C. 1995. D. 1996. Answer D. 1996. Question 470. Expenses incurred by a fund for printing of key information memorandum can be amortized over A. 10 years. B. 5 years. C. 15 years. D. Cannot be amortized. Answer D. Cannot be amortized. Question 471. A mutual fund's investments are guided by the A. AMC. B. Board of Trustees. C. Investment objectives. D. Unit holders. Answer C. Investment objectives. Question 472. UTI was the only mutual fund for the period A. 1984 to 1988. B. 1963 to 1988. C. 1964 to 1992. D. None of the above. Answer B. 1963 to 1988. Question 473. Investors who follow the fixed allocation approach. A. Maintain balance in their portfolio by liquidating a part of the position in the class, which has given higher return, and reinvesting in the other asset class, which has lower return. B. Are not disciplined. C. Increase their equity position when equity prices tend to climb. D. None of the above. Answer A. Maintain balance in their portfolio by liquidating a part of the position in the class, which has given higher return, and reinvesting in the other asset class, which has lower return. Question 474. An investor should not invest in a mutual fund if A. His capital base is large. B. He is able to carry out detailed investment research and monitor the stock market. C. Both the above. D. None of the above. Answer C. Both the above. Question 475. Mutual fund can benefit from economies of scale because of A. Portfolio diversification. B. Risk reduction. C. Large volume of trades. D. None of the above. Answer C. Large volume of trades. Question 476. Which of the following is a disadvantage suffered by a mutual fund investor? A. High liquidity. B. Diversification. C. No tailor-made portfolio. D. Low investment. Answer C. No tailor-made portfolio. Question 477. A disadvantage suffered by mutual fund investor is that he has no control over the costs of investing. A. True. B. False. Answer A. True. Question 478. Which of the following statements about UTI is untrue? A. It was set up in 1963. B. It was formed by RBI. C. It was established by an Act of Parliament. D. It was not given a monopoly status. Answer D. It was not given a monopoly status. Question 479. Which scheme has the largest investor base? A. ULIP. B. UTI MasterShare. C. US 64. D. SBI Magnum. Answer C. US 64. Question 480. Which was the first diversified equity investment scheme in India? A. SBI Magnum. B. UTI MasterShare. C. MEP 91. D. Mastergan 92. Answer B. UTI MasterShare. Question 481. The private sector was granted permission to enter the mutual fund industry in A. 1992. B. 1993. C. 1998. D. 1995. Answer B. 1993. Question 482. The first non-UTI mutual fund was A. SBIMF, B. LICMF, C. Canbank MF, D. Indian Bank MF. Answer A. SBIMF. Question 483. The organization responsible for a comprehensive set of regulations for all mutual funds in India is A. RBI, B. SEBI, C. AMFI, D. SHIL. Answer B. SEBI. Question 484. The 1999 Union government budget helped the mutual fund industry by A. Regulating the industry practices, B. Exempting all mutual fund dividends in the hands of investors from income tax, C. Approving the code of ethics formulated by AMFI, D. Doing away with all regulations for mutual funds. Answer B. Exempting all mutual fund dividends in the hands of investors from income tax. Question 485. During the period 1992 to 99, the mobilization of funds by the mutual fund industry was about A. 5% to 6% of gross domestic savings, B. 2% to 4% of gross domestic savings, C. 7% to 10% of gross domestic savings, D. 25% to 40% of gross domestic savings. Answer A. 5% to 6% of gross domestic savings. Question 487. A close-ended scheme is quoted on the stock exchange at a discount to its NAV when A. The markets are bearish, B. Investors perceive that the fund will be unable to maintain the NAV, C. The assets of the fund are undervalued, D. None of the above. Answer B. Investors perceive that the fund will be unable to maintain the NAV. Question 488. Which of the following is a fundamental attribute of a mutual fund scheme? A. The names and addresses of the registrars and custodians, B. The nature of the scheme being income-bearing, C. The specified stocks in the scheme's portfolio, D. The name and address of the compliance officer. Answer B. The nature of the scheme being income-bearing. Question 489. Offer document of a mutual fund is A. Required by investors, B. Required by the AMC for its own reference, C. Required as per SEBI regulations, D. Not mandatory as per SEBI. Answer C. Required as per SEBI regulations. Question 490. The unites of a scheme being sold and repurchased as per the procedure laid down is one of the fundamental attributes of a scheme. A. True. B. False. Answer A. True. Question 491. The steps involved in the selection of an equity fund for investment are A. Sector selection, asset classification, and selection of fund managers and schemes, B. Sector selection, selection of fund managers and schemes, asset classification, C. Asset classification, sector selection, selection of fund managers and schemes, D. Selection of fund managers and schemes, sector selection, asset classification. Answer C. Asset classification, sector selection, selection of fund managers and schemes. Question 492. Compounding of interest is best explained by A. Balanced fund, B. Growth fund, C. Value fund, D. Income fund. Answer B. Growth fund. Question 493. From whom can a unit holder seek redressal if his complaint is not entertained by the mutual fund? A. AMC, B. Board of Trustees, C. SEBI, D. RBI. Answer C. SEBI. Question 494. An investor wishes to switch between a money market mutual fund and equity fund. What would you advise him? A. It would be better to stick to one type of fund, the one that meets his investment objective. B. He should keep switching parts of his investment from the equity fund to the money market fund as the market rises and switch back to the equity fund when the market falls. C. He should switch from the money market fund to the equity fund in a rising market and switch back to money market fund when the market falls. D. None of the above. Answer B. He should keep switching parts of his investment from the equity fund to the money market fund as the market rises and switch back to the equity fund when the market falls. Question 495. For choosing an appropriate benchmark to measure a scheme's performance, all of the following are required except A. The composition and size of the portfolio, B. The investment objective. C. Historical data of fund performance. D. The nature of investments. Answer C. Historical data of fund performance. Question 496. Which of the following characteristic of a fund that a risk-averse investor should choose? A. Gross dividend yield 15% beta 1.5, X marks 90. B. Gross dividend yield 10% beta 1, X marks 70. C. Gross dividend yield 11%, beta 0.9, X marks 80. D. Gross dividend yield 12%, beta 1.2, X marks 80. Answer C. Gross dividend yield 11%, beta 0.9, X marks 80. Question 497. A mainstream diversified debt fund is most affected by A. Reinvestment risk. B. Liquidity risk. C. Interest risk. D. Default risk. Answer C. Interest risk. Question 498. If yields fall, a debt fund manager will do all of the following except A. Sell short maturity securities and buy long maturity securities. B. See that the fund's average duration becomes longer than the market's average duration. C. Sell long duration securities and buy short duration securities. D. Sell high coupon securities and buy low coupon securities. Answer C. Sell long duration securities and buy short duration securities. Question 499. In which type of schemes should an unmarried professional will invest? A. Scheme investing 80% in debt securities. B. 50% in equity funds and 50% in income funds. C. 90% in equity funds having a higher P/E ratio than the market. D. All the money in a balanced fund. Answer C. 90% in equity funds having a higher P/E ratio than the market. Question 500. An investor buys units in a fund that has given excellent returns in the past, but his expectations are not met as the fund does not perform well this year. The investor can A. Sue the AMC. B. Sue the trustees. C. Sue the agent. D. None of the above. Answer D. None of the above. Question 501. A fund's investments at market value total 700.00 crore, total liabilities stand at 50 rupees lakhs and the number of units outstanding is 28 crores. What is the NAV? A. 30 rupees and 19 paise. B. 24 rupees and 98 paise. C. 32 rupees and 15 paise. D. 40 rupees and 49 paise. Answer B. 24 rupees and 98 paise.